Yes, welcome everybody. I'm just gonna wait for around 3 minutes, and usually everybody will be here that usually joins. Give me 1 second. Yes, now I think that we can start. So we'll start by looking at the news, and I always start by looking on investing.com because they usually have the best updates and so on. And there's a really good article about what is up ahead for the market today, and probably the best news here is basically what is happening for in the bond market. So yields are up, and usually that is very toxic for stocks, and that's probably the main reason why the tech stocks have been hit so hard is because people are investing basically in bonds because they are technically risk free, and the stock market, especially the tech side, has been basically overbought for a very long time and is significantly overvalued. So therefore, it is pulling back. Money is basically flowing into bonds instead of going into the tech sector. And you could basically look at the treasury bonds for the 10-year treasury bonds if they're going up or down, because that is basically what is impacting the stocks at this current stage. As long as that is going up, you could expect the stock market to continue to decline. Then there is, for example, the vote on the stimulus, and usually they are very good at basically timing this for every single Friday, and we could expect a big rally when this basically gets voted through. So yes, I don't expect it to hold, but for people that are buying very short term, then this could be a possible buy for and hold for a few minutes and then just sell it. Usually it jumps the entire market, but as you can see, both the treasury bonds are going up, which is negative for stocks, and also the US dollar is also rising. So these two factors are very toxic for the stock market as a whole. So if you look at the economic calendar, there is not a lot of major news here. However, there is the rig count, and it is basically now that oil is at a price level where it gets profitable for companies to enter the market again, you could see more rigs entering the market. And this basically means that the supply of oil will increase, and therefore the price of oil either stagnates or it may decline if supply increases too much. So keep an eye out for the bigger rig count, because if the rig count basically increases, then that could have a negative effect on, for example, oil, which at the moment is significantly overbought and is most of the time outside of the Bollinger Band. So that is also important. So let's go to the technical analysis. So for everybody that has not seen my setup before, this is basically what I use when I do my analysis. I do some of most of the analysis here because this is a far better platform than, for example, eToro. Technically, eToro platform is really bad. There is probably the worst platform there is when it comes to technical analysis. So it's far better to use one of these professional platforms. Some of them are free. For example, this one is a demo, can be a demo account. Basically, it allows you to test the analysis that are available on this platform. So it is also possible to buy a subscription to live data and so on, which makes it more possible. However, it's not available everywhere. Depends on where in the world you're basically from. So, but here I have the Bollinger Band, I have the stochastic, I have the CCI, I have the RSI, the MACD, and here is basically the price action with volume and also moving averages, and of course candlesticks. That basically a price action for depending on what day, hour, or minute that you're looking at. So what we're going to look at today is not any of these technical indicators. If you want to see those courses, that is basically available on my Patreon's platform. If you just scroll down, you can see for every Friday and every second Monday for the market analysis, you can basically see how you basically use these technical indicators. There is also other courses that are earlier this year and late last year, which are called Trading with Technical Indicators, and they're also available over at our YouTube channel as well. But we are going to look at patterns, and this is one of my favorite things to look at. So when I trade, I have this main page, then I have the 4 different charts for different time frames, 50 minutes, half an hour, 1 hour, and then 4 hours. And they are really, really useful. And then I have the bigger chart for just analyzing moving averages. And then when it comes to patterns, I have this. I only use the price action in order to analyze patterns. And we are going to use gold. So I didn't have gold here. There you go, there. So this is the gold, yes. So this is a price action for gold from January 2020, basically to today. And in this price action, you can find a lot of patterns, and they are quite clear when it comes to especially gold. That's why I've chosen to use especially the price action for gold. So first of all, you have what you call channels. Then you have, for example, squares. You have triangles, and then you also have flag patterns. So those 4 patterns is what basically I'm going to show you today. So first of all, it is the channels, or where this basically is trending. And what you do when you want to define a channel is that you want to get the most extremes, the top of these price actions. So for example, this is an extreme top to the upside, this is an extreme top, and so is this one. So if I were to take a line from the top here to the very top there, then this would basically be what I usually call for major resistance. And what that basically means is that if price action, that is down here at the 1761 at this current stage, if it were to rally up towards this resistance line, then it's very likely that it will run into resistance. And that basically means that we'll see something similar to this. It will rally up towards the resistance line and then break down. And that gives you technically the selling opportunity if you're looking for a sell position. So it's not a good idea to just sell it wherever. You should sell it when it's basically at these major resistant areas. So, for example, if we were to say that this were to rally and it went up towards this resistant line, then it's very likely that we'll see, or something like that we'll see something similar to this. It'll rally up and then break down, because past price action or behavior will occur here as well. So in essence, people will look at the very same thing. So they will look at this line here and they will basically come to the same conclusion that when we get to this line, yes, there will most likely be a pullback and people will start selling here. So it may also be that you go a little bit past. Sometimes you see that it goes a little bit beyond. So you could basically enter the market right here. That is possible if you have a stop loss right above. But you could also wait until basically see where this is going. If this were to break down again. And that is the safer bet. That is to wait until this increase has calmed down and then it goes back the other way. So you see something similar to this. So when it crosses this trend line right here, that would probably be the safest area to enter the market. So you could enter it on the way up, for example, when it hits the trend line, or you could wait until it goes past the trend line again and then enter the market. Because then you have basically crossed the trend line and the trend line will act as resistance again instead of now it's acting as support. And of course, if you do these trades, always have a stop loss above here if this were to continue rallying to the upside. If this basically breaks, that's why you have a stop loss in order to basically save your trade. Yes, it does cost to trigger your stop loss, but it can be far more costly if you don't have a stop loss and it just continues to go higher. Then you run into major troubles. So that is one way to determine when to basically enter a market when you have a downtrend like this. So you also have trend lines like this in between. So what you do there is that you basically take, now you have it right there, you take as many tops here as possible and put them into a line. So for example, around here. So as you can see, we have one top, almost one top, almost one top. We have, for example, here that you overshoot, was similar to what I pointed to earlier on. Then you have another top here, another top, another top. And when you have this many tops in a line, then it's very likely that when this price action goes back towards this line, then it will basically trigger a sell. So, for example, if you go all the way up here, then it's very likely that it will fall back down. But it could also fall down if we came to this area, because historical price action has shown us that this is a trend line that has acted as resistant. So you could do the same thing, just a smaller trade where it goes up and then most likely will fall back down to a lower level because we are trending downwards. Then you also have, so these are the resistance, then you also have the support. So the same thing here, for example, you take the very lows and the very lows and then you put it into basically a line. And it's the same thing, same principle as at the top. Historical price action has shown us that when we get to this slope, as you can see from the support trend line, then it's very likely that we'll bounce from that slope. So very similar here. This was sell, this could be buy. So we could go all the way down to this price action or this trend line, and then we rallied back up towards an area where I'll get to in a moment. Same thing here. It can do the same fall, rally, and here if it falls all the way down to this trend line, then it's very likely that it will rally because this historical price action has proven to be very supportive. So this is all probability. So there is no concrete fact in this. It is basically just probability. And therefore, you should always have a stop loss underneath because that probability is based on probability. Sometimes it works. Majority times, for example, this works, but sometimes it can go horribly wrong, and therefore you should have something that basically catches those bad trades. So you could also do a similar trade underneath here, not a similar trade, I mean a similar trend line, where you get as many bottoms as possible. For example, here, this one crosses, and all of these, and these almost hit. So also this line, when we get down to that, it bounces off it, and you could also make this as a buying opportunity, basically shorter trades. But if you go back to this, so question is, where would this go to? And last time we had the Fibonacci retracements, we had the Fibonacci projections, and this is in this case is a very handy tool, the projections and the Fibonacci retracements, because we know that we have a trend line here. We can look at the Fibonacci retracement, take it from here all the way to the top, and we can conclude that the reason why we have found support here in the past is because we are at the 50 Fibonacci retracement. So, for example, here we hit the 50 and then rallied. So we fell down, found support, and then rallied. Very similar here. We fell down, rallied, found support, and rallied. Today, we have fallen down. We have broken that Fibonacci retracement and are trading underneath here. We have pulled back, but still, it is now very likely that this will drop towards 1700. Very likely. That basically means that we have this as a goal, and we will most likely see this price action drop towards that area or this support line here. Probably overshoot and then go up. Similar to here, drop down, up, drop down, and up. We'll most likely see similar here, drop down towards 1700 or below that, and then go up again. So if you use the price or Fibonacci projection, you can technically estimate where we are going to rally to. So if we drop to this area, how far can we basically rally? So you take the Fibonacci retracement, now projection. No, sorry. Get this over here. Yes. Right there. So you take the projection and you put it here all the way up to the top, and another one to the area where you think that we'll find support. So it could be at the 1700. It could also be underneath at the trend line. So I'm going to say to the trend line because it is more likely, I think, that we'll go there. So these retracements basically mean that if we go down to this area here and find support and we basically rally, then we could rally to this point. It's the first Fibonacci at 23.6. The next one is 38, 50, and 61. So this basically means that we could see a rally toward, that's the wrong one. We could see a rally towards that point there. and that would act as a resistance. We could also continue towards this point at 1960, and then beyond that towards the 50, and now we're technically stretching it. And the reason why we're stretching it is because if we do that, then basically we are going past this resistant line. So it is very unlikely that we'll go towards that area. If we go past here, then we'll most likely hit that resistant line and then continue downwards. Because as you can see now, this is in a downslope, this is in a downslope. If we were to rally all the way to the top, it of course would go up and down. It wouldn't go in a straight line, but it would go up and down towards this area and then most likely break back down, because we have not broken the resistance line to the top, we have not broken the resistance line to the bottom. So this is one way to look at channels. So this is a very wide channel. We can look at the Nasdaq, which we have been trading not very successfully lately, but that there we have a very nice channel to the upside. So Nasdaq here is here. So we have two channels here to the upside. We have, for example, that one here, we have this one here, and then we have that one as well. So Nasdaq has been absolutely plummeting. This is not the future, so it hasn't showed up yet. But for example, a channel looks something similar to this. So we have an up, take as many tops as possible, and then you take as many tops to the bottom as possible. And this basically means that when we get to the top, it is more likely that we'll fall down. When we get to the bottom, it's most likely that we'll rally, and then you just go up towards these very highs. So channels are fantastic because they're very predictable. Loss underneath here or stop loss above if, for example, this happens. So when we made a trade, when I made my trade here, I did not expect this to cross the channel. That's why I started selling, buying small positions all the way down, and then all of a sudden it just fell apart. So that trade certainly did not work. So we had also a channel here, which we also broke out only a few months ago. This was basically back in September. Remember that I did this trade, and this was also a fairly bad trade, because when you are trading within a channel and it's so predictable, you think that it will continue forever, and all of a sudden it doesn't. So the same thing happened here in September. We were in this channel from April all of September. It was 1st of September. We crossed this line, this upper line here, and then it just completely collapsed. It fell, I think it was 12% or something like that in only roughly 2-3 weeks. So beginning of it stopped here in mid-September. Yes, but this is also an example of breaking this channel to the downside. And this looks like it also broke this channel to the downside. And therefore, we have no idea where to point. We can look at Fibonacci retracement levels and so on and see where this is going. But if you look at, if we just drop the channel now and we can go and look at the squares, then we had a consolidation area here. So this consolidation area, we had basically a top here, bottom, also bottom here, and then we broke out of it. And usually we can basically measure how many points this is. So this is roughly 1,631 points. And that basically means that from where you are at the moment and to the upside, you could rally, give or take, no, not right there, right there. You could rally roughly 1,600 points. You can see it in my corner now. We rallied 1,446 points before we basically started breaking down. So the measurement of this is most likely how much this will basically increase. And if it's fairly point, it's 200 points off, and it's very accurate. So what we could see in the future is basically something similar to this. We could see this fall all the way down to 12,000 and then rally again and fall back around 12,000 and then go to 14,000. So we could see a movement similar to this. So in that case, we could fall towards 12,000. We could go up around half back to nearly 12,000 before continuing all the way up towards 12. So this would probably go even further than this, somewhere there and here. I would have a similar V pattern here, 15,000 and 15,000. But still, we'll have to see what happens. If it makes this pattern, if it falls all the way down to 12 or 12,500, give or take, it will give us indication where we are basically going. You can also look at the Fibonacci Retracements, for example, here, and you can see that the 61.8 is right at 12,000. So here, that should be as far as it technically goes. If it goes further than that, then we're going all the way down to this level. That's 100. So 10,000 or 11,000, and I don't think that we're going to go to that level. So if you look at this, it could go towards that area there. So we'll probably know next week, sometime next week, if we are going to that level. Then it may rally again, go down, and then it may take off to the upside. So that is basically those are basically squares, and how you basically can use squares in order to determine when you break out of a formation and how far that formation basically can go. So we'll go back to gold, because now we can look at flag patterns. So we have to go far back here. No, there's one there. So you can have bullish flag patterns and you can have bearish flag patterns. So we need to get this. So the reason why they are called flag patterns is because they look like a flag. If you try to draw it, you have the post, and then you basically is a bottom, and then you rally, and then you gradually go downwards. You don't go all the way back down towards where you were, but you go back down. So what happened here? Here. So this basically looks like a flag. So it rallies, gradually goes down, makes a flag pattern, and usually when this happens, what follows it is basically a rally to the upside. So this is what you call a bullish flag pattern, and you can see them everywhere. Sometimes they are small, sometimes they are big, but it is an indication that we are going to take off to the upside. They can also be opposite, and that basically means that they look like something like this. Something like that. So you have a pole, you from the top, break down, you gradually go up, and then you break down yet again towards the downside. So this is basically the opposite flag pattern that you have. And you can also see that in this chart. If we go all the way back to, I had one right there. So this is an indication of a bearish flag pattern. So you have the top, you have the bottom, give or take, then you have this flag pattern here, and what follows that flag pattern is basically a big drop towards the downside. So you have a drop, slowly goes up, and then all of a sudden, bang, to the downside. So they are also very common. So you can have the bullish ones, which are from the bottom to the top, where you have a gradual decline. And what follows that is basically a rally to the upside. Or you can have the opposite. You have basically a breakdown, you have a gradual increase in the price action, and then you all of a sudden have a massive fall after that. So this is a bullish flag pattern with a rally. This is a bearish one where you fall, rally, and then fall further to the downside. So last but not least, we can look at triangles, sorry, not squares. So triangles. So we have a really, really good example, especially in gold, of a massive triangle. So you can have big ones and you can also have small ones. So we can take the small one first. So I remember this trade. This was basically back in July, August, and September, where we had this massive increase in the gold price. We basically overshot. So we can make a triangle out of this, a top, and also here you overshoot. So this, we consider this as also a top. And then you have the bottom. So you have here, and if you do a line like this, then you get something that looks like a square. And this square is very important because usually what happens here is that you have a massive increase and then you have a decline. Then you have another increase and then you have a decline. And basically what happens here is that you go and zigzag into this corner. And when you get into this corner, the price action basically slows down. So there's a biggest price action is basically at the edge here on the right side, left side, sorry. And then it just decreases when it gets into this corner. And when it gets all the way into the corner, it basically has to break out to the upside or it has to break to the downside. There is no way to know where that will go, but it is something that you should be aware of. You will have most likely have massive movement to the upside or massive movement to the downside. So if you're very technical, you basically can make two trades. You can make a trade where you bet that this is going up and then you have a stop loss underneath, or you bet that this is going down and then you have a stop loss right on above. In that case, you're basically hedging this and you're betting both ways, both up and down. So you will make a loss because it will trigger the stop loss at any point, but the other trades will most likely be bigger than that stop loss, and therefore you will earn a profit on that trade. So this is an example of a small triangle, and we can look at the bigger one where that made gold drop significantly in the past. So we are here. We can get this over here. So we need to look at this top. What was it there? And then we had the big one that was right here. So I said it was all the way back in the that what we were witnessing here was a big triangle where we had two tops, we had two bottoms that were forming, and then I basically made this square, and I said that most likely what will happen here is that we will trade all the way into this corner of this triangle, and then we'll break out. So I thought that we were going to bring this occurred. So you can have these false breakout and then it goes back, but it fits really well. So we did rally up towards here, did go past this resistance line, and then we broke back in towards the triangle. Then we went to the bottom, we went all the way zigzag into the corner, and then it would have broken to the upside or broke to the downside. Fortunately, it broke to the downside. I was fully expecting the price action for gold to outside because everything it's very bullish for gold. For example, the US dollar was in a decline. There was economic uncertainty, and there was just a flood of fiat currency in the market. And usually that is a very bullish sign for gold because people will use it as a safe haven. However, I think most people are putting their money into Bitcoin instead of gold, because everybody's saying that Bitcoin is the new gold. Probably, maybe. Time will tell. But this is another example of a triangle. They are very, very important, for example, to side or breakouts to the upside. And the only really way to trade these is to make 2 bets. So, as I said yesterday, the other way, you can put the bet or a stop loss on here if you bet that it's going down, or you put basically a stop loss underneath if you're betting that it's going up. So that is, you basically take 2 bets, and one of them will of course be profitable and the other one will not. So that is a risky trade, which you probably shouldn't do if you just started trading, to be fairly honest. Yes, that is the basically how you use channels, how you use squares, how you use triangles and flag patterns in order to determine where price action basically will go. So, you have any questions? Yeah, we could go to the market analysis, because markets are technically open in a few, not in a few minutes, it's an hour. So we can go to the scan, and this should be a very interesting day, especially there's a lot of action in the market. And usually I just technically just stay away from the market when there is so much action, because the risk is just much higher. I just like to enter the market when the markets are basically slowing down. But for example, if you look at the currencies that we usually look at, it's increasing significantly. US CAD, Aussie is breaking down significantly. So is the Euro US, the US yen is rallying, and the British pound and the US dollar is also decreasing. So we can take, for example, probably the most promising trades here. So this has been acting as support, the 20 exponential, the 40 and the 50 for a very long time. So it is not a good idea to enter this market yet. It could actually fall from the 50, and then if it turns around here, then it is possible to enter that trade. So it will look similar to this. So it will go towards the 50, could cross the 50, go all the way down to the bottom of the Bollinger Band, and that basically means it will go underneath the 50 and towards this area here. But 50 has proven to be significant support in the past. And you could enter the trade around this area when it has basically turned around. You'll see also the stochastic turn around and the MACD and the CCI turn around. So there's where you basically will see when you could enter this market, and of course a stop loss underneath in order to save your trade. So the Great British Pound US dollar, that is a possible trade, but probably for Monday or on Tuesday, when this basically has fallen all the way and turned around. I'm not found with this, but the same goes for the Euro US dollar. It is testing the 100 moving average. Same goes for here. If it turns around, then it's possible to buy it to the upside. Aussie dollar is most likely going to cross the 50 moving average, very similar to this. So it will probably go a little bit lower, and then if the technical indicators are turning around, we could see a gradual increase to the upside, where you have it here, a gradual increase to the upside after that. So entry of the market just above the 50 moving average around this area here, stop loss underneath, and a target of the previous highs, or 0.8. That is most likely where it goes. But if we look at the Nasdaq, because that has been absolutely hammered the last few trading days, then you will see that most of these major tech stocks that I usually invest in, they have fallen down to support. So this is Apple. So it has fallen down to the 150 moving average. It is very overstretched, significantly oversold. Retracement 14 is very, very, very oversold. So I saw it in pre-market. Pre-market is still down. I think it was 0.13. It probably has changed now since it's a few hours and I looked at it, but it was still down pre-market. But it is very likely that it will rally from this area here, which has been significant support in the past. We haven't tested it since all the way back here. So Apple is considering this price action here, it has fallen roughly 16%, so 18.4%. It is fairly cheap at this point, but still, technical indicators have not turned around. Until they do, you should technically just leave this alone. You can look at for example, the different charts, 4-hour chart, 1 hour chart. If you can see this turning around, it has to cross the 200 moving average in the 4-hour chart before it becomes less risky. But it has a very steep downtrend still in the half an hour and also in the 1-hour chart. You can see this channel right here going like this, and it's just going. There is no movement still to the upside. So it is not ready to invest in that yet. We can look at Amazon. Very similar here. We are testing the 200 moving average in Amazon. And it is significantly oversold, very overstretched. So this is probably one of those stocks that will rally when the stimulus package is confirmed, which it highly will be, because people will have more money, and that will be very bullish for the market. And all of these stocks that are significantly oversold, they will most likely rally at least towards the 20 moving average. So still very bearish, but this is a very good sign. It is significantly oversold, significantly outside of the Bollinger Band here, but still technical indicators, they are not turning around yet. Until they do, it probably cross the 200 moving average, and then it will go back up to the upside. If it breaks further, I don't think that is going to happen. I think we're going to see a rally before we go lower. Then we're going all the way down to 2,700 and roughly the 300 moving average. Then we have also Microsoft. That is also a plausible buy at this point. We are very oversold, very overstretched. Rally towards the middle of the Bollinger Band right here at 4% rally. That is plausible, but still technical indicators, they have not turned around yet. Then we have Facebook. That is not very good at the moment. Tesla is, well, Tesla, first of all, is highly overvalued. I think there are a PE ratio of about over 1,000, which is fairly ridiculous. So their price to earning for a stock is just out of this world, and therefore it could basically lose half of its value before even it gets to some kind of normal levels. But first of all, the 200 moving average is acting as support. We tested it here on Wednesday when we fell, and fell again on yesterday, and in pre-market it was down around 2.some%. So it may test again the 100 moving average, and it hasn't been this cheap for a very long time. We have to go all the way back to this area. It's basically beginning of December before we see it getting so cheap. So if it breaks the 100 moving average, it will go towards the 150, and that is all the way down here at $540. We can also look at the Fibonacci Retracement for Tesla. For example, we see it here because we can look at the very long term for Tesla. It has broken the first. It is nearly getting towards this area here, which is 38.2, and that is give or take $585 for the share. It will most likely get down to that area and then bounce. Don't really see it going further. If it does, it goes all the way down to these previous, that is give or take around $500 a share. So all the way down here, well, maybe that would be for this stock. But if things go as they are going at the moment, if the Nasdaq does continue to fall and so on, that basically this will be pulling that in that direction. Then we have Google. Finally, it started dropping. I started shorting it back over here, and now it started dropping finally. But I would stay away from Google at this point. Netflix found support at the 50 moving average and then rallied. So we can look at the scan. So people that haven't seen this before, technically I scan for where the stock or price action is way outside of the Bollinger Band, outside in the bottom or at the top, and where we have a significant overbought position in the RSI or an oversold position in the RSI. So both those combined, oversold outside of the Bollinger Band to the bottom, overbought and outside of the Bollinger Band to the top, that is where you should get interest in basically things, because then it's very likely that it will bounce back to the other side. So you make the scan here, and I make the scan for the Nasdaq, and instead of going through all of the 100 companies in the Nasdaq, you get 18 companies that are in that category, where you have them outside of the Bollinger Band to the bottom. So we look at the first one. This is RIGN. So I don't really know what the company is, as long as it just has this outside of the Bollinger Band here. So this one is significantly oversold and also outside of the Bollinger Band. So also likely to rally, but we are in a downtrend here. We are actually in a channel that is going down, and if we rally, then it's most likely we rally to the channel and then break down. So not very interesting. Then we can look at this. This is KDP. It found support here at the 100 moving average, on the edge of being oversold and way outside of the Bollinger Band. So this could also rally if you get down to the 100 again, rally towards the middle of the Bollinger Band, and that's a trade of roughly 4.66% to the upside. Then we have this. This looks more promising. We are oversold here, 1929, and we're outside of the Bollinger Band. So at this point, it could rally towards the middle of the Bollinger Band, and that's a trade of roughly 7% to the upside. And then, of course, always have a stop loss underneath where you are trading, because if this continues to break down all the way down to the 300 moving average, you are not supposed to basically, that basically will save you a lot of pain that you get out of the trade before it gets really bad. So you have Microsoft that we have seen. Then we have this. What is this? It's not important. It's not very interesting. Then we have EXC, and this is looking very promising. We are significantly outside here of the Bollinger Band, significantly oversold. However, technical indicators are still very bearish at this point. We are crossing the 200 moving average, so this is a very risky trade. It has to go past the 200 moving average again to the upside before considering this rallying further to the upside. Then we have Amazon. Then we have MNST, and it's also looking fairly promising. We have an RSI of 2.3, significantly outside here, just unlike the shape of this candlestick, because there is almost there's almost a full candle, and that usually means that there's a lot of selling pressure to downside at the end of the session, and that usually means that it will continue going down. So yes, well, you couldn't have an eye on this. Then we have Apple, definitely something that I will look at. Facebook, not at this point, could be, but it has to rally above the 200 moving average. So we have OKTA, and this is just outside of the Bollinger Band. We're at the 27 here, but still it could fall all the way down to the 100 moving average before going back up. So could have an eye on that, but that it's kind of in the criteria of both of these analyses. Technical indicators are still fairly bearish. You can look also at the 4 different charts to see where this could bounce, and the 4-hour chart usually gives an indication. So, for example, it has bounced off this yellow line. That's a 200 moving average of the chart. So it could go down to there and then continue rallying, but still everything else looks very bearish at this point. So we have we can move back down. We had this nope, that one. Yes, this is Marvell Technology Group, and this is not oversold yet, but we are significant outside here in the bullish band, and we are testing the 100 moving average. So if this turns around here, green candlestick today, then it is possible to put a stop loss underneath in order to secure your trade, and then target the middle of the Bollinger Band from where you're now. No, that was wrong. So we are there. We can target the middle of the Bollinger, roughly there. So 10% to the upside. So yes, it's also looking very promising, this stock. Then we have this that is also looking very nice. That is XLNX. And the reason for that is because it is touching the 150. It has rallied from the 150 before. It is outside of the Bollinger Band. We are rallied from the 150 before. It is outside of the Bollinger Band. We are at 36, not oversold, but almost. And stochastic is technically turning around, running off. So yes, this could be as far as this goes, and we could see this rally at least to the middle of the Bollinger Band, which is there. That is roughly 11% to the upside. The 100 moving average acted as resistant the last 2 days, so just keep that in mind. Then we have snaps, and this is also looking promising because we are at the 100 moving average, finding support there. We are almost oversold, and we are outside of the Bollinger Band here. So most of these stocks, they need to turn around and rally before entering them. Then we have this is not looking very good. Then we have Tesla, and I think that Tesla will most likely go lower. Look at pre-market, both for Tesla and for Neon, that is very likely that will go lower. And last, it is this, that is ANSS. We are significantly outside of the Bollinger Band. We are also touching the 150 moving average, but this candlestick is very, very bearish. So we could fall significantly further because the selling pressure yesterday at the end of the session was very substantial. So yes, any questions? They're only probably 7 minutes usually, take an hour for this. Any stock or anything to look at? You can just write in the chat in YouTube, or write in the chat for example, in Patreon. Yes, okay. I wish you good weekend and good luck with the trading.